USD risk ahead. Guys, tomorrow it's the big day, it's NFP day, the biggest US data of the entire month, massive risk for the dollar. So what is NFP then? So it stands for non-farm payrolls, and non-farm payrolls essentially are the official US jobs data, right? They're taken by the US government body, the Bureau of Labor Statistics, and it just looks at how the US labor market is doing. And they do this report every single month. So what are we going to get in this report tomorrow? Well, we're going to get the official number of jobs added to the US economy in January. We're going to get the unemployment rate as of the end of January. And we're also going to get the rate at which average hourly earnings are increasing every year at the end of January. Those are the three main components. We also get some others, but those are the three that the market thinks is the most important, right? So how is the US labour market doing right now then? Well, by most measures, the US labour market is doing very, very well, right? Unemployment rate is at historic lows, 3.5%. In terms of how many jobs are being added to the economy every single month, it's been very, very healthy for the last couple of years, right? Slowing down a little bit, but the US economy on average is still adding north of 150,000 jobs every single month. And in terms, finally, of average hourly earnings, they've also been very healthy. Healthy gains in wages, right? Since the financial crisis, wages have been getting pushed up and up and up. And this cycle, as in a couple of years ago, back in 2018, they actually got to 3.4%. So every year, people were earning 3.4% more. However, it has come a little bit lower since then. It's roughly around about 2.9% at the moment. So what are we actually expecting out of tomorrow's numbers then? Well, the market thinks that in January, 160,000 jobs are going to be added to the US economy. They think that the market thinks that the unemployment rate is going to stay unchanged at 3.5%. And the market's looking for a slight rise in the rate at which average hourly earnings go up every month. We're thinking that it's going to come in at about 3%, slightly higher than last month, which was 2.9%. So knowing all these numbers is all well and good, but how is the market going to react? How is dollar going to react to this data? Well, that is where things get a little bit more tricky, right? So usually this is what happens, right? So the initial reaction for the dollar is determined by the headline number, right? The number of jobs added to the economy in the month. So, for example, if tomorrow the headline number is 280,000 jobs added to the economy, you're going to see the dollar spike higher, right? On the other hand, if it's only 80,000 jobs, or even a negative number, which means jobs were lost, you're going to see the dollar sell really hard. But then this is where things get a little bit more tricky, right? So we also have to consider average hourly earnings and the unemployment rate. So maybe you have a really strong headline, but the unemployment rate rises slightly and average hourly earnings go down a little bit. Well, that means that initial spike might come back. Equally, you might have a really bad headline number, dollar sell, but you might have a really good unemployment number, right? Unemployment comes down, and you might have really strong average hourly earnings, they increase, in which case dollar might then come back a little bit. So the thing is, you can never perfectly predict how the reaction to NFP is going to be, because there's so many different things you need to be looking at. But the main thing to remember is that initial reaction is usually determined by that headline number. So yeah, guys, we're really excited about this tomorrow. We think there's going to be some really good dollar volatility to trade. That's pretty much it from me for now. I'll see you in the next one.